What is up, my dudes who send nudes and girls who are total prudes? Here's the big headline this week. The Federal Reserve is about to make an interest rate decision. Investors are betting, and I mean betting like it's DraftKings for nerds at this point, that the Fed is going to cut by a quarter point. That's 0.25 for you idiots out there. Futures market says there's a 90% chance. 90%. That's higher than Trump's approval rating with Elon Musk by his side. Now, Powell, well, he's in a tough spot, if we're being honest. Inflation is still sticky. Food, rent, airline tickets, even hardware are all up. But jobs, they're falling like Taylor Swift's ex-boyfriends after she releases those diss songs, as they call them in the pop world. Payrolls only added 22,000 jobs in August. 22,000. That's basically just everyone in Florida who hasn't been priced out of home ownership and homeowners insurance. So Powell's dilemma is simple. Cut rates too fast and inflation's going to continue to go up. And you cut too slow, well, the labor market tanks. It's like Goldilocks, except all the porridge is poisoned in this story. So Wall Street, of course, is loving this. Stocks just hit record highs again. The S&P, the NASDAQ, the Dow, they're all partying like it's 1999 again. But Main Street, yeah, not so much. It's like the opposite. The AALL survey says only 28% of regular investors are currently bullish into the market. 49% are currently bearish. And the rest, well, they're just watching Zillow listings for homes they can't afford because their insurance premiums cost more than their mortgage. Meanwhile, Deutsche Bank, Wells Fargo, and Barclays, they're all upgrading their S&P targets. Deutsche says 7,000, Wells says 7,200, Yardeni says we could melt up to 7,000 by December. Melt up. That's not an investing strategy. That's what happens when you forget your frozen pizza in the oven or when you forget it in your car, like I did last night. And what's driving this market euphoria exactly? Well, artificial intelligence. Apparently, the future belongs to chatbots that can tell you why you can't afford eggs right now. Oracle stock popped 30% last week because they said the AI cloud will generate 144 billion by 2030, which sounds amazing until you remember, well, it's Oracle, the company whose last big innovation was PowerPoint clip art, if we're being honest here. But analysts keep saying the music stops when AI CapEx stops, which is funny because I'm not old enough to remember when they said the same thing about the .com boom. And then the music stopped, and so did pets.com. So this week, we've got retail sales on Tuesday. If Americans are still spending on beef, produce, and coffee, which all spiked in the CPI report, then hey, who needs savings anyways? We also got FedEx earnings, which are basically a report card for the whole global economy. If FedEx says business is slow, you know Amazon's packages are just circling the country in empty trucks for fun. And don't forget Cracker Barrel's results. Yes, the same Cracker Barrel that's been trying to rebrand because apparently rocking chairs and biscuits were too controversial for America nowadays. Pussies. Anyways, so here's your weekly outlook, folks. Will the Fed cut or will they not cut? And either way, the market's going to throw a tantrum and be pissed about it. Inflation is still sticky. Jobs are weak. But AI, well, that's the new religion. And the stock market is soaring while Main Street clutches its wallet like it's trying to board Spirit Airlines. My advice, don't bet against Jerome Powell. Don't buy a house in Florida. And if you really want to survive this economy, maybe become a robot because it looks like Elon is currently hiring. Anyways, that's your weekly outlook for this week. I hope you all have a great day today. Make sure you check in, like, subscribe, hit that bell notification so you never miss a Trades and Gains update. I'll see you all in the next one. and happy trading. See you guys Monday morning.